Yes, I think one of the first things to do is to really take a big step back and not look just at the last 5 years, but actually, if you look over the last 25 years, that really helps to remember that in the first decade there, 2000 to 2010, emerging markets tripled while the US index was flat. So it's just the last decade or so where there has been the opposite and where emerging markets have struggled. But they do have the growth advantage, they do have the valuation advantage. And maybe finally we have a catalyst to actually unlock those advantages. And that is maybe deliberate or not. But Donald Trump seems to have reduced that one way bet on the US and the dollar. And so if the dollar starts to weaken, which it has, that's been the biggest pushback on emerging markets for the last 10 years for us when we speak to potential investors. Now it's loosened its kind of dominant regime. We might finally see some small flows out of the US into emerging markets, and it doesn't take too much to move the needle quite significantly there. So I think these markets are often seen as more risky and more volatile, but that's not always the case. If you look at what happened in COVID, actually emerging market central banks were in many ways far more orthodox than the West. We didn't see the same kind of fiscal largesse that we did in the US and in Europe, with all the subsidies and the handouts and interest rates going to zero. In emerging markets, they took the short-term pain, but actually they came out of that crisis far stronger than the West in many ways.